All right, the tax credit deadline, what you need to know. As part of a plan to stimulate the United States housing market, Congress last fall approved the extended housing homebuyer tax credit. All right, so this extended the deadline for the first-time homebuyer credit from November 30th back in 2009 to April 30th, 2010. All right, so what's the deadline? You've got to write the contract by April 30th, 2010 and close by July 1st, 2010. Don't have to have it closed by the end of April, but you do have to have it closed by 1st of July. All right, how much money is available? The maximum allowable credit for the first-time home buyer, $8,000. The maximum for repeat buyers, so there's a difference here. We got the first-time buyer, $8,000 maximum. If you're a repeat buyer, it's up to $6,500 for long-time residents. So what properties are eligible? Well, the primary residence is what we're talking about, not second homes, not vacation homes, not vacant land. Primary residence, including single-family homes, condos, townhouse, co-op. It's primary residence. So how do you go about as a buyer to get the benefit? You can apply for the credit after you close for a 2009 tax return. So for last year's tax return, if you haven't filed it yet by April 15, 2010, if you haven't filed your taxes yet, you can apply for it, and you've closed. You got your settlement statement. You put it with your tax return for 2009, and you would get the credit for the 2009. If you've already filed 2009, you can wait until you file 2010 by April 15th of 2011, or you can say, I don't want to wait that long, and I would like to do an amended 2009 return, and you can do an amended tax return. See your accountant on how to do that. And who qualifies to qualify? First-time buyer. The purchaser, you or your spouse, may not have owned a residence during the last 3 years prior to the purchase. So to qualify on that, that's to get the $8,000. Now to get the $6,500 as a repeat buyer, current homeowners must have used the home being sold or vacated as a principal residence for 5 consecutive years within the last 8 years. Okay? First-time buyer hadn't bought a house in the last 3 years. Repeat buyer, if you want the $6,500, the house you're vacating, you have to have lived in as your primary residence 5 of the last 8 years. 5 consecutive years out of the last 8. Any income limits? Yeah, the new law raises the income limits for people who purchase homes after November 6, 2009, which is everybody I'm talking to. The full credit will be available to taxpayers with modified adjusted gross incomes up to $125 or $225 for joint filers. So those with modified adjusted gross incomes between $125 and $145 or $225 and $245. So if you're above that adjusted gross income, you're eligible for a reduced tax credit. If you're over $225 for single filer or over $245 as a joint, they do not qualify. Okay? Foster Smith giving you the tax credit deadline information. If you want to call me, 1-800-942-1828, extension 6029. I can help you answer any questions further on how do you get in on this $8,000 or $6,500 tax credit.